This is bad news. Just this past week, AI stocks got absolutely massacred. NVIDIA plunged 9.5% in a single day, wiping out $240 billion in market cap. What does that number mean? It's like Tesla just vanished completely. And it's not just NVIDIA. The entire AI sector is in shambles. Microsoft dropped 6%, Google fell 4%, and even AI darling OpenAI is seeing its valuation questioned. The market is asking one deadly question: is the AI revolution actually changing the world, or is this just another century-defining bubble? Today, I've identified 5 warning signs that remind me of the night before the 2000 dot-com crash. Back then, the Nasdaq crashed from 5,000 points to 100 points, leaving countless investors bankrupt. Will history repeat itself? How can ordinary people protect themselves? Today, we're going to use data and historical perspective to help you see through the AI bubble hype. If this content helps you, please like and subscribe, and hit that notification bell so you don't miss any of our weekly episodes. Let's get straight to the facts. Here are the 5 warning signs of the AI bubble. Warning sign number 1. Valuations completely detached from reality. OpenAI's latest valuation is $157 billion, but their annual revenue is only $3.4 billion. What does that mean? A price-to-sales ratio of 46 times. Let's compare. Apple's PS ratio is 7 times, Microsoft's is 13 times, Amazon's is 2.5 times. Even during the peak of the dot-com bubble, Cisco's PS ratio was only 30 times. Current AI company valuations have completely defied gravity. Warning sign number 2. Unprecedented cash burn rates. Global AI infrastructure investment is expected to exceed $200 billion in 2024. But here's the question: when will these investments pay off? NVIDIA GPUs are in such short supply that a single H100 costs $40,000. Major tech companies are frantically buying them up, just like people once scrambled for tulip bulbs. Meta is investing $37 billion in AI this year. Microsoft is spending $50 billion. Google, $48 billion. With such massive investment scales, if they can't generate corresponding returns, a bubble burst is just a matter of time. Warning sign number 3. Revenue growth can't keep up with expectations. Let's look at the actual data. ChatGPT Plus subscriber growth has significantly slowed, dropping from 100% monthly growth to around 20% currently. Users' willingness to pay for AI is far below market expectations. For enterprise AI applications, truly value-generating use cases are still extremely rare. Most companies have bought AI tools, but actual usage rates are below 30%. Warning sign number 4. The regulatory storm is approaching. The EU AI Act has officially taken effect. The US FTC is investigating AI monopolies, and China is also developing AI regulatory frameworks. Once regulations are implemented, many AI applications could be restricted, and the entire industry landscape will be reshuffled. History tells us that regulation is often the trigger for bubble bursts. Warning sign number 5. Massive insider selling. This is the most frightening signal. NVIDIA CEO Jensen Huang has already cashed out $1.2 billion this year. Microsoft AI division executives are heavily reducing their company holdings. When even the people who understand the technology best are frantically cashing out, what does that tell us? When the captain starts abandoning ship, what should ordinary passengers do? Now let's travel back to the year 2000. The dot-com bubble then has striking similarities to today. From 1995 to 2000, the Internet revolution concept exploded. Any company with .com in its name could see its stock price skyrocket. Yahoo's market cap once exceeded $200 billion, but its annual revenue was only $1 billion. Pets.com sold pet supplies, went public, and collapsed within 9 months, burning through $300 million in investment. Back then, people believed the Internet will change everything. Traditional business models will disappear. Clicks matter more than profits. Does this sound familiar? On March 10, 2000, the Nasdaq hit a historic high of 5,048 points. Then what happened? It crashed all the way down to 114 points, a 78% decline. It took a full 15 years for the Nasdaq to climb back above 5,000 points. During that time, countless investors went bankrupt. 401k retirement accounts were cut in half, and the entire tech industry entered a winter. But not all companies died. Amazon's stock dropped 94%, but it survived and is now worth $2 trillion. Google went public after the bubble burst and became the biggest winner. The lesson: truly valuable technology will be reborn after the bubble bursts, but 99% of companies will disappear. So what's the real state of the AI revolution? Is it real or fake? Undeniably, AI technology is indeed developing at breakneck speed. GPT-4's capabilities exceed average human performance. AI art has reached professional levels. Autonomous driving technology is maturing rapidly, and AI drug discovery shows enormous potential. These breakthroughs are real, not hype, but commercialization is still in its early stages. Technological breakthrough doesn't equal commercial success. Most AI applications are still in the usable stage, far from being user-friendly. The number of AI companies actually making money can be counted on one hand. The AI revolution will indeed happen, but it might take 10 to 20 years, not 2 to 3 years. The market has compressed 20 years of expectations into 3 years. That's the essence of a bubble. Understanding this reality, let's look at what ordinary investors should do. How should ordinary people respond to a potential AI bubble? Strategy number 1. Distinguish between real and fake AI companies. Real AI companies have actual AI revenue, deep technological moats, positive cash flow, and don't rely on concept hype. Fake AI companies just ride the AI wave. Their revenue mainly comes from traditional business. They burn money at alarming rates, and their valuations are severely inflated. Invest in real AI. Stay away from fake AI. Strategy number 2. Focus on AI infrastructure. When bubbles burst, application layer companies suffer the most, but infrastructure companies often survive. Areas worth watching: chip manufacturing like TSMC and NVIDIA, cloud computing platforms like AWS and Azure, data storage like Seagate and Western Digital. Strategy number 3. Dollar cost averaging and cash is king. Never put all your money into a single sector. Suggested allocation: AI-related stocks 20% to 30%, traditional value stocks 30% to 40%, cash and bonds 30% to 40%. Keep enough cash and wait for opportunities after the bubble bursts. Strategy number 4. Long-term holding of quality targets. If you believe in AI's long-term value, then prepare to ride through the bubble. Amazon shareholders rode through the dot-com bubble and earned 1000x returns. But the prerequisites are: you must choose the right companies and have enough patience. Strategy number 5. Set stop-loss limits. Any investment needs stop-losses. For AI investments, I suggest individual stock stop-loss at -20%, overall position stop-loss at -30%. Execute strictly, no exceptions. Finally, here's my outlook. Short-term, 6 to 12 months. The AI bubble might continue inflating until some catalyst event occurs: regulatory crackdowns, a star company imploding, or macroeconomic changes. Medium term, 1 to 3 years, the bubble will likely burst, AI stocks will correct significantly, and the industry will enter a consolidation period. 90% of AI companies will disappear, only 10% will survive. Long term, 5 to 10 years, the real AI revolution begins. Companies that survive will earn massive returns. Investing in AI is essentially investing in the future, but be prepared for a roller coaster ride. All right, that's today's analysis. Core takeaways. First, AI bubble risks are real. Second, but the technological revolution is genuine. Third, the key is choosing the right companies and timing. Fourth, risk control always comes first. If you found this content valuable, please like and subscribe and share it with more people. Let me know in the comments. When do you think the AI bubble will burst? Which AI company are you most bullish on? Next episode preview, we'll deep dive into the logic behind gold's price surge and how ordinary people can allocate gold assets.